Beyond Meat Inc. (BYND) is currently trading at $1.09 per share as of 4:20 a.m. EDT on May 1, 2026, marking a massive intraday surge of 33.72%. While most of the market is fixated on the raw percentage gain, the real story here is the timing. This explosive move is happening just days before the company is scheduled to report its first quarter 2026 financial results on May 6th. The expectation in the broader market was that Beyond Meat would continue a slow, painful grind downward, especially after receiving a NASDAQ non-compliance notification regarding its late annual filing. However, the reality of this price action suggests a violent short squeeze is underway, fueled by a 31% short interest as a percentage of the float. Investors are essentially playing a high-stakes game of chicken with the shorts, betting that even a moderately not terrible earnings report next week could send the stock into another orbit. The general sentiment surrounding Beyond Meat has been overwhelmingly negative for nearly 2 years. Most analysts have written the company off as a victim of fading consumer interest and high operational costs. But if you look at the recent trading volume, it is nearly double the daily average. This isn't just retail enthusiasm. There is institutional repositioning happening here. Beyond Meat stock is suddenly behaving like a high-velocity tech ticker rather than a food processor. This tension between the narrative of a dying brand and the reality of a 30% single-day rip is exactly why individual brokerage accounts and interactive brokerage platforms are seeing a spike in activity for BYND. If you are using Robinhood stock trading or any other online investing app, you have likely seen this ticker at the top of the movers list today. While we see a lot of noise about Tesla stock or Nvidia stock in the headlines, the action in the plant-based sector is providing a different kind of opportunity. Many traders using SoFi Invest or Fidelity brokerage accounts are trying to figure out if this is a sustainable turnaround or a classic dead cat bounce. The data shows that the company has been aggressively right-sizing. They have exited their operational activities in China and are focusing on high-margin products like the new Beyond chicken pieces and heart-healthy breakfast sausages made with avocado oil. This pivot toward clean ingredients and Beyond the plant protein company branding is a direct attempt to win back health-conscious consumers who were turned off by the highly processed nature of early meat alternatives. I want to hear from you on this. Are you currently holding shares, or are you sitting this one out until after the May 6th earnings call? Comment below how many shares of Beyond Meat you currently hold. It helps everyone get a sense of where the community sentiment actually lies versus what the headlines are telling us. The current momentum is also being helped by new distribution agreements, including a partnership with Big Geyser to launch Beyond Immerse, their first functional beverage line. This move into beverages is a complete departure from their core business model, but it provides a potentially higher margin revenue stream that isn't dependent on the fluctuating costs of pea protein and manufacturing logistics for meat substitutes. For those involved in self-investing through investing sites, this diversification is a critical piece of the puzzle. It shows management is no longer content to just wait for the plant-based burger market to recover. They are looking for growth wherever they can find it. Now, let's look at the mechanics of the company's current situation. Beyond Meat operates as a developer and seller of plant-based meats, designed to mimic the taste and texture of animal-based products. Historically, their business relied heavily on big-name partnerships with fast food giants and massive retail footprints. While they still have a presence in over 2,000 Kroger stores, the volume of products sold has seen double-digit declines over the last year. The revenue for the previous quarter was around $61.6 million, which was a significant drop from previous years. However, the company reported a massive net income figure recently, but investors need to be careful. That was largely due to a non-cash gain on debt restructuring, not actual profit from selling burgers. This is where the expectation versus reality framework becomes so important for your portfolio. The expectation is that Beyond Meat is burning through cash and heading towards a liquidity crisis. The reality is that they have managed to extend their debt maturity and add liquidity to their balance sheet, giving them a much-needed runway to execute this transformation initiative. They are forecasting Q1 revenue between $57 million and $59 million. If they beat that number by even a small margin, the shorts, who have over 140 million shares sold short, will be forced to cover, which could create a feedback loop of buying. This is a dynamic we often see with Robinhood crypto or high-growth stocks, but seeing it in a consumer staples company is rare. For those using Schwab Intelligent Portfolios or looking for investment help through more traditional channels like Fidelity Mutual Funds or Fidelity IRAs, Beyond Meat might look like a gamble. And let's be clear, it is. The stock has a beta of 2.67, making it nearly 3 times more volatile than the broader market. This is not a set-it-and-forget-it type of investment. It requires active monitoring of trading platforms and institutional filings. We have seen CFO Lubi Kutua and other insiders selling shares under 10b5-1 plans recently, which can sometimes be a red flag, though these sales are often scheduled months in advance.
The macro environment is also playing a role here. High interest rates have made it difficult for growth companies to borrow, but if the Fed signals a pause or a pivot, small cap stocks like BYND often lead the way in a recovery. When you look at your SoFi trading platform or your Fidelity mobile app, you have to weigh the risk of a potential bankruptcy against the reward of a successful brand repositioning. The company is betting heavily on its new Ivory Burger formulation and climate solution certification to appeal to the Gen Z and millennial demographic that dominates the user base of Robinhood app and other modern investing sites. As we move toward the final half of 2026, the catalysts to watch are the expansion of the beverage line and the stabilization of retail margins. If Beyond Meat can prove that its right-sizing efforts are actually reducing the cost of goods sold, they might finally achieve a positive gross margin. Currently, their margins have been hovering near zero or even negative once you account for inventory write-offs. That is simply not sustainable. The reality of their survival depends on their ability to stop the bleeding in their core product lines, while the new beverage and chicken segments gain traction. Investors who are used to the steady growth of Apple stock might find this level of uncertainty nauseating, but for those who specialize in online investing and look for distressed assets with high turnaround potential, BYND is currently the main event. Whether you use interactive brokerage fees as a way to trade with low overhead or prefer the user interface of SoFi stocks, the technical indicators are screaming oversold on the long-term charts, despite this recent 30% jump. The gap between the 52-week high of $7.69 and the current price illustrates just how far the stock has fallen and how much room there is to run if the company can simply prove it has a future. In summary, the expectations for Beyond Meat were at an all-time low, creating a perfect environment for a massive squeeze. The reality of the company's financials is still shaky, but they are taking the necessary steps to restructure their debt and diversify their product offerings. The surge to $1.09 is a clear signal that the market is beginning to reevaluate the bankruptcy narrative. However, with an earnings report just days away, the volatility is only going to increase. Keep a close eye on your Fidelity trading platform or your Robinhood investments, as the next week will likely define the trajectory for BYND for the rest of the year. The contrast between the bleak outlook and the aggressive price action today is a reminder that in the stock market, sentiment can change much faster than the underlying business, and that is where the most significant moves are made. The depth of this analysis shows that Beyond Meat is more than just a meat alternative company. It is a case study in market psychology and debt management. As the market continues to react to the upcoming earnings, the focus will remain on whether they can meet their revenue guidance of $57 million to $59 million. If they fall short, today's gains could vanish as quickly as they appeared. But if they show even a hint of margin expansion, the reality of a leaner, more focused Beyond Meat can finally start to exceed the low expectations the market has held for so long. Always ensure you are checking live intraday figures on your preferred individual brokerage or investing sites before making a move, as a stock this volatile can move several percentage points in the time it takes to refresh a page. Stay focused on the data, and don't let the headlines distract you from the institutional activity that is clearly driving this current breakout. The depth of this analysis shows that Beyond Meat is more than just a meat alternative company. It is a case study in market psychology and debt management. As the market continues to react to the upcoming earnings, the focus will remain on whether they can meet their revenue guidance of $57 million to $59 million. If they fall short, today's gains could vanish as quickly as they appeared. But if they show even a hint of margin expansion, the reality of a leaner, more focused Beyond Meat could finally start to exceed the low expectations the market has held for so long. Always ensure you are checking live intraday figures on your preferred individual brokerage or investing sites before making a move, as a stock this volatile can move several percentage points in the time it takes to refresh a page. Stay focused on the data, and don't let the headlines distract you from the institutional activity that is clearly driving this current breakout. This video is for educational purposes only, not financial advice. Please do your own research before investing. Market involves risk. Like this video, comment your thoughts, share with your friends, subscribe for more updates.